everybody, to this session on a look behind China's wall, into China's financial technology ecosystem. My name is Keller. I lead the World Economic Forum's work on the future of financial services in China out of our Beijing office. This is probably the most interesting financial technology market in the world right now. There's tremendous transformation happening here in the Chinese financial market as a whole, and technology and FinTech companies are driving a lot of that transformation. I think everybody has woken up to that story and to the tremendous transformation that's underway here in China, but there's few people outside of the country that truly understand it. And it's my great pleasure to introduce three panelists who will help us today to get a bit of a better understanding just how much change is happening here and what the opportunities are. With us is Bindru Tan, who is the CEO for Southeast Asia of OneConnect. She was with us in Abu Dhabi last year, and it's great to have you back. Welcome back to the panel, Bindru.
Very good to see you again, Kai.
We got Matthew Chen, who's the Group CEO of Sunline's overseas business. He's overlooking all of Sunline's overseas subsidiaries. Matthew, welcome to the panel. Very much looking forward to your comments.
Thank you, Kai. Glad to.
And we got Stephen Yao, who's the founder and president of Totodi.com, very much focused on the regulatory and RegTech space. And of course, that's a very important component of the whole ecosystem build out here. So Steve, very much welcome to the panel and looking forward to your remarks today.
Thank you, Kai, and glad to meet all you guys here. Thank you.
So as I said, there is a tremendous transformation underway here in China. I think that was always the case over the past couple of years. Everybody has been aware of it. But 2020 is maybe the year that truly puts China on the map globally as the most exciting and fascinating fintech markets globally. And a big part of that is probably driven by the pandemic, which has again accelerated the adoption of digital service delivery. The ecosystem was well built out here in China before the pandemic. So once the virus hit and people relied on digital means to receive services, China was very well positioned to leverage its strengths and its capacities. And we've seen a lot of technology firms partnering with traditional financial services providers in the delivery of services. When we think about the delivery of credit, of financing to small and medium-sized enterprises, which are a big factor in the Chinese economy here, and how technology was a big enabler of making that happen and getting money into the hands of merchants quickly so that they could build the bridge until they receive further revenue during the shutdown. And there's many other examples for how technology has really been able to transform the delivery of financial services. And when we think about the financial inclusion story that China is able to tell, then there's a lot of power behind that. Bindru, I want to start with you. Do you agree with that notion that COVID has really accelerated the development of the space here? What have you seen within the FinTech community of how it was able to respond to the crisis? And in any way, has the crisis changed the direction of developments here? Do you see any new trends that were built over 2020?
Definitely. I think while COVID has been a very tough year for everyone, even though we're not the sector that gets terribly hit, the technology companies is fortunate to be favored during this crisis. But despite saying so, overall technology spend is going down globally. So even though we're not as hard hit as the retail sectors, I would think that the customers in the first, the good news is that they are more digitally savvy right now. Adoption is going up. There are more inquiries. So OneConnect is very lucky that we started in 2018. If we had just started this year, this will probably be the worst year to start. So because we started in 2018, so all the international banks or ASEAN banks that's out of Singapore already know us. And so they know who to reach out to this year when they decided to have more conversation. What we saw is that maybe the customers are also more price sensitive now, considering that everybody is tightening their belts, knowing that a recession is coming. For sure, we need to then maybe package something that's smaller. So what we did is that when we first started, we decided that we will not service maybe a small part of the solution. We were pretty selective on what we want to do, and unless the banks have made substantial investments to really embed the solution deep into their businesses, we felt that we didn't want to do anything that's too much on the surface only. But that had to shift a little with COVID. So some of our customers had long-term plans, but then really wanted to start small. So we had to make adjustments from that perspective. The other thing I feel that is a bit of insights for OneConnect is that previously we had based HQ in Singapore without needing really a presence in Southeast Asia countries. And with COVID, you realize that it's not possible then, because you can't fly people down from China, you can't fly people down from Singapore. So if you don't have an entity in the country, you no longer have this face-to-face with the client. So within this 9 months of COVID, we went through a few RFPs that we had to compete with local vendors that's in the country, and that's a tough one. So we decided to set up entities. So this year we have 3 new entities, Abu Dhabi being one of them, Philippines, Malaysia. I previously only have Singapore, Indonesia, so now there's 5 entities that's outside. So that's another adjustment that we made. I would think overall, together with COVID came also the trade tensions, or the trade tensions before COVID for that matter. So, but overall, the perception and the receptiveness for Chinese technology is still high. I think from a speed and innovation perspective, is quite well recognized by both ASEAN as well as UAE financial institutions. So with the trade tensions, actually, there's a little bit of more clarity in who's for the Chinese tech and who's not. I think, but generally, I still am happy with the receptiveness of Chinese technologies.
Perfect. It sounds like a very busy year for you. I want to come back to some of the points you just mentioned later on. But let's go to Matthew. Matthew, I think when people outside of China look at the Chinese market, they immediately think of the 2 big platforms that are delivering services, particularly to individual consumers, right? And that story is by now very well understood. It's also a story that very much is about the individual customer, the individual and the consumer. Is that a story that's going to, where the focus is going to continue? Is FinTech development going to continue its focus on the individual client, on the consumer? Or are we going to see more B2B solutions developed in China? Like what is the direction of travel that you're seeing within the FinTech space?
Yeah, obviously, a lot of people only know the 2 giants, right? The two techie giants, the Alibaba and the Tencent. But actually, there are a lot more than the 2 giants. If you're talking about FinTech companies, maybe let me just take you back step a little bit, going back to your earlier question about the impact of COVID, right? Some people actually say that, it's a very interesting finding that, you look at how the whole digitalization actually got started in China. Some people actually like to say that maybe a similar pandemic, which happened to China 17 years ago, the SARS, when the SARS hit China in 2002, 2003, you actually see the digitalization or digital transformation of the whole economy actually start to accelerate. Taking Alibaba, for example, right? It's obviously established in 2000, early 2000, but it didn't actually take off until the SARS actually hit China. Because you see, the most difficult thing to change is actually people's behavior, right? So there's a lot of actually effort from economists, from financiers, actually devoted into how people's behavior is going to be changed. Unfortunately, sometimes it takes a crisis like this, right? Chinese people, that you live in China, we believe in every crisis, there's always an opportunity, right? So maybe this is a bit of blessing in disguise if you're talking about the SARS situation. That's why all the, even the grandpa was forced to shop online. This is actually how the whole e-commerce started in China. The starting e-commerce really is a very important milestone of how the whole China starting the digital transformation, right? And obviously then you have, the third-party payment, and then you have given the smart saving, the microloans, the regulator step in, and then how the regulator actually forced the banking segment to catch up, because otherwise, all of these customers can be eroded away by the giants like Tencent and also Alibaba, right? But going back to your question, in terms of fintech companies, this is how I read it, right? Because a lot of people like to talk about fintech or tech fin. Actually, for the past seven years or so, or past decade, this place is getting really, really crowded. So what do I mean by crowded? So the fins, which is the bank, traditional banks, the fins trying to be the tech. You see a lot of banks actually, setting up tech companies, and the tech's trying to be the tech company trying to be the banks, right? You have the Ali and the Tencent, obviously also open up a digital bank. But the way forward I see is more collaboration. The banks forever going to have their own core competency in terms of the Basel. I don't know whether you watched the Jack Ma's speech recently. Obviously, it caused a bit of tension everywhere. Right? So I think this is actually the future. The future is, like or not, right? Either willingly or unwillingly, these giants going to be really collaborating in terms of sharing data with the traditional banks. Because banks obviously very good at the traditional DNA is all about risk management, right? So using the Basel, using capital adequacy, obviously the new way using AI and big data, you need to embrace that new technology. But at the end of the day, it's about sharing, about collaboration. So how the tech and the fin can collaborate, especially when it comes to data, comes to technology, and then together to serve the underserved market. Obviously, when we talk about financial inclusion, digital inclusion, we always talk about SME, especially the micro SMEs, as well as the underserved individuals. So you mentioned, yes, a lot of fintech companies obviously devoted themselves into individual space, but there's also, from a banking point of view, obviously, as long as there's a corporate customers, they're always going to be banked, right? So traditionally, the banks are very good at serving corporate customers, including, you call it B, right? Including some of the micro SMEs. But when it comes to the underserved segment, because of the lack of data, because the offering of financial product services become too expensive, for them to access, that is the problem, right? So my view is the trend is you will see a lot more collaboration between the tech companies, including those two giants, but also some of the smaller ones. I can give you an example. We actually launched the platform. I call it Sunline, a Sunline platform, which we actually launched together with Tencent at the end of 2018. But we so far we have 28 banks and 23 fintech companies. A lot of these fintech companies are very small. They range from e-commerce, travel, social, gaming, education, even medical. But they all have their own expertise in their own silo, right? So the idea is to actually collaborate, creating a platform, let them collaborate together with the banks. I mean, these 28 banks are all very small banks, all the way from the Xinjiang province sharing border of Russia all the way to Hainan Island. They are willing to bend backwards to serve the underserved market, but they don't have the outreach. So they need a bridge, if you like. They need a platform to connect. So that the tech and the fin need to collaborate to serve the underserved market. So of course, including the Bs, right? The SMEs, especially the SME, micro SMEs.
I think you raised an interesting point. What is the future of collaboration between the traditional service provider and the technology or the fintech firms, and how these different players are going to coexist going forward? I want to come back to that later on in the discussion. But you also made a reference, of course, to the speech by Jack Ma, which created a lot of headlines here in China domestically, and we all saw some of the consequences of that earlier this week, with the Ant Group IPO being delayed for now, I guess. And that reminds us that regulation plays a major role also in the technology space. And in China, at least, it seems like the sector was able to develop sort of outside of the immediate regulatory oversight that traditional players were subject to. And that seems to be changing quite rapidly, which is going to have important implications for the further development of the industry. Stephen, I want to come to you because that's your bread and butter. What sort of risks do you see in the financial system in China at the moment? Like, what are you working on with your clients when you think about solutions with them? And how can technology be a tool to address some of these risks?
All right. First of all, I wouldn't want to comment on the Jack Ma's speech. That's pretty sensitive. But anyways, like all of you, as you know, like technology is driving rapid change in financial services with the latest developments see as resolution rather than the evolution. The financial services sectors has always embraced technology and has continued to evolve. Whether it could be the more recent development in high frequency trading and contactless payments cards, or in the past the move to the dematerialization. However, financial regulatory developments lags behind financial innovation, just as you guys just mentioned, which leads to increasing pressures on the financial regulators. So technology is like a double-edged sword. While the expanding the boundary of the financial services, improving the efficiency of financial transactions, reducing the cost of financial transactions, and reducing the information asymmetry of financial transactions. Emerging technology are more likely to cause new risk problems, such as, first of all, technology has blurred the boundary of financial services, financial products across industry, across institutions, and across field emerge endlessness, breaking through the industry boundary of the traditional finance and making the appearance of the risk more complicated. Second, that I believe technology increased the concealment of the financial risks. Financial products stressed under the cover of the technology accelerate the spread of the financial risks and expand the scope of the financial risks, and virtually enlarge the probability and harmfulness of financial symmetry risks. Third, technology increased the disintermediation risk of a traditional finance. The development and the application of a technology make it possible for capital supply to bypass the existing commercial banking system, directly conduct the demand side of the funds, complete the capital extracorporeal circulation, and increase the possibility of a financial transaction breaking away from the financial regulations. For us, with the continuous penetration of the technology into financial industry, the development of financial services depends more and more on advanced technology and the trading platform. And last but not the least, the technology can more quickly and comprehensively grasp the identity information and behavior data of the financial consumers. When the data is not used and protect properly, the risk of the personal information leaking will become more and more serious. That's actually has been see a lot of places we can see not only in financial sectors. So the other factor that I think is actually financial regulation has been gradually tending since the global financial crisis. So the financial regulator in various countries in the world has been watched on this, and leads to the increase in the cost of financial institutions to comply with the regulatory laws in order to adapt to the new regulatory requirements. Financial institutions in those countries has increased the human resource and the capital investments. So the based on this.
That's Stephen, I think we have to come to a close because we're up on time. Okay. But I think we made some very important points, particularly reminding us about the double-edged nature of technology, and it can be a great force for solution, but also introduce new risks. Bruce, thank you for sharing your perspective and how much you've done throughout the year and your positivity on the receptiveness of solutions coming out of China and Chinese tech going forward. I think it's a positive message that we need to hear as the geopolitical backdrop for all of this is getting more severe. And Matthew, I think the point you raised about the ecosystem and how our different players are going to interact and coexist in the future, that's going to be a fascinating story playing out here in China. And I think a lot of folks globally will watch this space because there's going to be a lot of learnings for the rest of the world coming out of China into the innovation space here. Thank you all three for joining us for this panel, and have a wonderful rest of the of FinTech Abu Dhabi.
Thank you.